Welcome everybody to today's webinar. We're starting a little early, that's okay. What I want to do is talk to you today about how to beat the market makers trading weekly options. This is one of the 3 programs that I offer on my website. We have labeled this SPX because it's the SPX weekly options that we trade. SPX War, weekly option regression. SPX War, weekly option regression. So that's what we're going to be talking about today. Now, I do have the question box up. And as we're going through my discussion, if you have any questions at all, like I said, I've got the question box up. Type it in there. I will stop what I'm talking about and answer that for you directly. The other thing is I'm not offering anything today. What I'd like you to do is, this is, like I said, this is one of the 3 programs. This is one of my very best programs actually that I teach. I want, at the end, I'm going to show you how to become a free member of our website. And there is a myriad of educational information there. I want you to come over and be a free member. See what I'm all about. See whether it makes sense for you. And then I'll show you the 3 programs that I do. The other thing I want to mention right off the bat is that I've been trading for 35 plus years. I am not one of those people that teaches because I can't do. I have done, and now I am teaching. This is how I make my living. I continue to be a trader. And I've made a lot of money, and I'm getting to the point in my career where it is time to give back, and I've put together these 3 programs which I believe incorporate everything that I do in my own personal accounts and my own hedge fund, so that you can learn how to do this. Now, the stock market is not an easy place to make money. I sometimes am amazed at how people come in and they're unwilling to do the work. It's going to require a lot of work, and what you need to do is not shotgun this. What do we have today? We've got 7 speakers on here, and it's good stuff. We all have good stuff. I love candlesticks. I use candlesticks. Okay. What you need to do as an investor is find out what makes sense to you. Zero in on that strategy. Spend the time, and I'm talking about thousands of hours, learning that strategy, going through losing streaks, and then finally you will emerge on the other side as a professional trader. You're not going to make millions and millions and millions of dollars overnight. Some people do, sure. It's just like going to the casino and rolling the dice. Things happen like that. The odds are against you. What you need to do is find out what you want, put the time and effort into it, and emerge on the other side with a realistic goal as to what you want on the stock market. And I think this program that I'm going to be talking to you about today is a great one for people that are just starting out. It's easy to understand. It's easy to follow. I give you real-time alerts. I give you email and text alerts. I teach you everything that I'm doing. It's a great one for beginners. Also, it's a good one for people that have a large portfolio. Here are my goals. I want you to fully understand how the markets are rigged against you. The markets are rigged against you. Okay? I want you to understand that the reason you lose money is market manipulation and poor entry and exit techniques. I want you to learn a high probability short-term income generating technique that you can use right away on both large and small starter accounts. And then finally, I want you to understand and take advantage of the weekly options, specifically the SPX. The SPX is the Standard & Poor's 500. The SPY is the ETF of the SPX. The SPX is the big boy. The reason I trade the big boy is because it has better credit. See, we're going to be selling options. It has more credit. Basically, I want you to understand how you can use the weekly options is the best method to generate income. It's the best method to generate income. If you spend the time and you learn this, you can make a nice income month after month after month after month. And that's what it's all about. You can do this in the stock market. Okay, again, a little bit about me. Again, my name is Dale Brethauer. You take a breath and you hold it for an hour. Brethauer. I've been trading for, I got to update this, 35 plus years now. I'm a hedge fund manager. I trade for a living. This is what I do. I've also been a guest speaker at Money Block, Trade Monster, of course, Investors Inspiration, Metastock, The Money Show, Value Charts, and MicroQuant. Renee told you that I've written 3 financial books, and I am the founder of what I believe is the best educational website available today, and that is www.optionsinfinity.com. www.optionsinfinity.com. And we'll be going there towards the tail end of my presentation. I'm going to show you what we've got on the website and how you can take advantage of it. Dr. Van Tharp is a psychologist who specializes in working with investors and traders. He's my guru. If it weren't for Dr. Van Tharp, I wouldn't have been who I am today. I started out many years ago, and I was okay. He taught me how to make it in the world of trading the stock market. He's a very down-to-earth person. He has you do your due diligence. And he's written a book just recently, and if you haven't read it, I would behoove everybody to go to Amazon and buy this book. I think, you can probably get a paperback of this for less than $10. Excellent book. Trade Your Way to Financial Freedom by Dr. Van Tharp. A couple of things he says in there is financial freedom is really a new way to think about money. Most people think they win the money game by having the most money and the most toys. And I think that's a lot of people that go into the stock market. They go in because they look at a chart and they look at a chart and say, hey, I would have bought here and I would have sold here. This is so easy. Anybody can do this. I'm going to make $1 million doing this. What they forget about is that we, as investors, trade on the far right-hand side of the chart. We don't know what tomorrow brings. We don't have tomorrow's newspaper. Tomorrow is uncertain. It's not as easy as looking at past performances and charts and saying, oh, I would have bought here and sold there. It's not that easy. So really what you need to do, what he's saying up here is, hey, be realistic. Have a realistic goal. What do you want? Can you make some money and help you out with your retirement? Can you make some money and help you out paying some of your debt. I mean, be realistic. Don't just go into the market without a goal, because if you don't know where you're going, how do you know when you get there? He also says that financial freedom, and I love this, financial freedom means that your money's working for you. It makes more money than you need to meet your monthly expenses. How cool would that be? And that's a realistic goal. You can do that. When you start going after unrealistic goals in the stock market, that's when the stock market, it's almost like it senses that greed and it will knock you out. Have a realistic goal. I love his definition of financial freedom. What a great goal to start with. That doesn't mean you won't spend hundreds or even thousands of hours building the foundation for your financial freedom. It does, however, mean that financial freedom is possible once you lay the groundwork. It is. It is possible. You ever watch golf on TV and the pros? It's almost effortlessly the way they hit the ball, and it's like, how can they hit the ball so far and so accurate? They have spent thousands and thousands of hours hitting the ball. Their muscles have been trained how to do that. That's what you have to do in the stock market. You have to spend thousands of hours, and you have to get your teeth kicked out a couple times, and you have to go through some losing streaks before you can finally be a professional and do this for a living. Now, a lot of financial analysts will tell you that, oh, you want to retire, you don't have enough in your bank account. You don't have enough in your bank account to retire. However, if you had a method to make you consistent cash flow, wouldn't that be cool? Wouldn't that be cool? I would rather have a method that I can rely on to go in and tap anytime I want versus a large bank account. It's a different way of looking at things. It's a different way of looking at things. Okay. Are weekly options the best way to obtain your goals? And you're going to have to determine that. I think they're a great vehicle to grow a small account quickly. I think they're a great vehicle for larger accounts, not using 100% of your larger account, but using a portion of it. I've got a couple very large portfolios along with the hedge fund. And most of my portfolio is in stock. Most of my portfolio is in stock. A portion of it I use to sell weekly options. A portion of it I use to sell monthly options. So these three really are the three programs that I teach my mentees. But are weekly options the best way to obtain your goals? Well, let's take a peek at it. Futures are, you can get quick profits because of the large leverage. Quick profits because of the large leverage. And you look at that, and I mean, you talk about getting your juices flowing and getting and becoming green with envy. One thing you have to remember about futures is 99% of all retail accounts not only lose money, but a lot lose their whole account by trading futures and Forex. And let me let that sink in for a second. Futures look very, very attractive. But boy, unless you know what you're doing and you have an exit strategy and you don't get greedy, You're going to be one of the 99% of all retail accounts. This is a statistic that I'm not just putting this on paper. 99% of all retail accounts not only lose money, but a lot lose their whole account trading futures and Forex. So I crossed that off my list right away. Oh yeah, I've dabbled in the futures market. I mean, it's attractive. It's fun. It's fun to look at corn and pork bellies and soybeans and silver and gold and trade those commodities. I've done that. I've made a lot of money in futures. I've lost a lot of money in futures very quickly. Futures are not for me. Not for me. Okay, next one down the list is stock. Stocks are good for extremely large accounts where you're fine with compounding wealth at a small percent per year. Well, that's what I do. That's what I do. And one of my programs is to not only show people when to buy and sell what I call the financially strong stocks, and these are from 10 different market sectors that have the best cash from operation. See, I've spent some time in business, and I've spent some time actually teaching the fundamentals of finance. So I know what makes a good company. But buying and selling, you have to have some technical approach too. But the big thing is when the market goes down, and it always goes down. It always goes down. It goes down on the average of 4 times a year. Now this can thanks, somebody just chimed in and said, yes, you're correct. I don't know which topic he was thinking about. Yes, I'm correct, but thanks for the input. Just recently we had a market correction. And now the market only corrected 1%. However, when I see the market is getting ready to correct, I will hedge that with the SPY. That is one of the programs that I teach people. I've got some very wealthy clients that are extremely pleased because they have worked hard for their very large portfolios. And they have lost a lot in 2008. They have lost a lot last year. The market corrects. It doesn't have to be a correction like 2008 for people that are invested in hedge funds and long-term positions to lose large portions of their portfolio, and then they have to make twice as much back to get back to where they were. That's why I teach hedging. That's why I teach hedging for stocks. Okay, so let's scratch that off the list. Selling monthly options. I also sell monthly options, and I focus on the RUT, which is the Russell 2000. This again is good for all size accounts, but you know, we're targeting about 20-30% a year, which is fantastic. But if you want to look for generating income on a regular basis, and you want to look at something that's good for both smaller and larger accounts, looking to make sizable, consistent income, this is where you want to go. Weekly options. Weekly options is the game that we want to play. What do we know about weekly options? Well, options, especially weekly options, are rigged with explosive gamma and high premiums. This is by design. Market makers pocket this money by taking it right out of your account during times of rapid price movement at key strikes. You don't want to buy options unless you are very, very good and have a exceptional program that has a good exit strategy and you're in for a short term. What you want to do is you want to sell. You can join the market makers that have put high premiums on these weekly options. And by joining them and selling the options on the indices, specifically the SPX, you're going to take advantage of the hyper fast time decay of the premiums and have it working in your favor. It's called theta decay. It's called theta decay. And theta decays very rapidly in the last week. And if you've got a trade on and you are in a position where you can take advantage of that rapid theta decay, it's like money in the bank. Money in the bank. You wanna join the market makers by selling options on indices. And what better indice than the S&P 500? By selling options, the hyper fast time decay, the theta decay, works in your favor. But you never want to sell these naked. You always want to have protection. I always go in with a vertical spread, either a bear call or a bull put. I sell a bear call or a bull put. Now you say, well, yeah, but if you look at the option that you're selling and you did it naked, you can make so much more money. Not true. Not true. Because the margin that the broker is going to require when you sell naked, it will be exponentially more than when you sell a vertical spread. Therefore, when you're looking at total return on opportunity cost, you will do better selling vertical spreads than you will selling naked. And you get protection. This is just a graphic representation of what happens with theta decay. And it'll go along and it decays. In the last 30 days, it just exponentially drops. This is the last week. You can see what happens in the last week. We're selling options. And during that last week, that theta decay just evaporates. And that's how we make our money. Gamblers get it wrong. Gamblers get it wrong. We are the casino in this system. We're the casino. Traders get lured in and buy cheap weekly options, exactly what the market makers want them to do and exactly what we want them to do and set us down. We sell them. We are the casino. We're selling to the gamblers, to the traders that get lured in to buy these cheap weekly options. We're selling to these people. 9 times out of 10, you should never buy weekly options. I buy weekly options. Well, not necessarily weekly options. I usually buy options that are going to expire 2 to 3 months to give me a little time for it to work. But I've been doing this for a long time. I'm a professional, okay? 9 times out of 10, you should never buy weekly options. Be on the side of the market maker. Sell them. The other thing is novices don't know how to protect themselves if something goes wrong. Not only do we have protection on, but I have an exit strategy that when it goes in the opposite direction, I know exactly when I'm going to get out. Why the SPX weekly options are the place to make money. Okay. Now, I've studied this, for a long time. S&P 500 is the place to be, especially in weekly options. Over 1/3 of all SPX volume is now in the weeklies, creating a fantastic opportunity. These large volumes yield excellent bid-ask spreads and quick fills. You're in. You don't have to worry about, I should get in right now. I can't. It won't let me in. With the SPX, you're in a matter of seconds. And the bid-ask spread is usually a penny or two. Now, large hedge funds and institutions use the SPX to hedge their very large portfolios. Something starts going against them, they will buy puts or actually sell the SPX. The SPX is priced in for a 1% move, but the SPX doesn't move 1% very much. It creates an 85% win ratio for one standard deviation instead of the standard 65. And let me show you what I mean here in the next chart. Standard deviation, this is a chart of the SPX. This is a 30-minute chart, 20 days, 30 minutes. The purple line here is what's called the regression line. The regression line is calculated every day. It's calculated by taking 50% of the price over that time period above the line and 50% below the line. The purple line, the regression line, is a fantastic trend line, if you will. Notice that 50% of the price is below here and 50% is above. Now, many moons ago, I used to calculate these by hand. I saw that they were so valuable. The regression line and the regression channel are so valuable. Now, I mean, this is a chart right out of Thinkorswim. I'm not affiliated with Thinkorswim, but I think they happen to be one of the best trading platforms available today. They do these on a 1-minute chart. They do them on a 30-minute chart. They do them on a weekly chart. It's just a click of the button. It's amazing. It's amazing the power that a lot of these trading platforms will give you today. Okay, what I do then is what they do then is to take plus or minus 1 standard deviation, and that is the green line, plus or minus 1 standard deviation. The gold line is plus or minus 2 standard deviations. Well, so what? So what? Okay. Give you a little statistics here, and why every math teacher should be a millionaire. Plus or minus 1 standard deviation, it's showing you right here, there 68.2% of all prices will be contained within plus or minus 1 standard deviation. 68.2%. Okay. Now, because the SPX is so heavily traded by hedge funds and large institutions, that 68% is more like 85%, which is fantastic. Fantastic. Now, remember the gold line, the plus or minus 2. What I'm going to do is add 27.2 to that, and I'm going to come up with 95.4% of all prices will be contained within plus or minus 2 standard deviations. Okay, let me go back to the chart. Here's plus or minus 2. Very seldom will it go outside this. This is kind of like the casing on a sausage. This is all the meat inside the casing, and every once in a while you'll get a little pinhole and it'll push through there. But you almost can think about this purple line as being a magnet that gains strength the further away we get from the mean. Remember, the green is plus or minus 1 standard deviation. Look at this. Look at this. It comes down to the -1, and that magnet sucks it back up. Well, what happens then? It overshoots. Okay, and goes back, and then it pulls it back in and it overshoots. And wham, down it goes, and it overshoots, and up it goes. This regression channel is one of the best tools that I have ever found. If you don't use the regression channel, start using it today. You don't have to calculate it by hand like I used to. It's right there in your trading platform. Just go ahead and set it up. Take a look at the +1 and the +2 standard deviation. Remember, you got about 68.2% that it's going to be held within this the green lines, and 95.4% is going to be held within the gold lines. So if it gets up around, if it's trading right up around here, what do you think you ought to be doing? Absolutely. Puts, selling, whatever. That's what you ought to be doing. Okay. Statistics are with you. Okay. Now, you're probably saying, I've read a lot of Wall Street jargon, especially on options. Hold on for a second. I've got a question that just came through here. In layman's wording, can you explain standard deviations? I don't have a math background. Okay, cool. And that came in a couple minutes ago. Did I explain it to your satisfaction, or would you like me to go back and go over that one more time? Go over that one more time. I think I might know where you might need. Let's see. Where is my? Nope. Going forward. Basically, the ±1 standard deviation is okay. Cool, will do. It is a mathematical equation, and I don't have it in front of me right now. But the best thing for you to do is go to Google Chrome or whatever you use for your web browser, and just type in standard deviation. And it's going to show you the mathematical equation. Basically, what the standard deviation does is it sums the previous prices, if you will, and then it's going to take the square root of those divided by the number, and that's going to show you how far away it has a tendency to move if this is the mean line, if you will. Okay, this is the mean line. The regression line is the mean line. And remember, once again, it is calculated by 50% of the price above and 50% below. I don't have a lot more time to go into that at this point in time. I understand where you're coming from, and I think the best thing to do is just type it into your browser. It'll probably take you to Wikipedia, and Wikipedia will give you more information than you need to know. Okay. Yep, exactly. You got it. You got it. It's exactly right. Okay. All right. Now, if you're not a math major and you don't have a math background, you'll probably read that formula and go, yeah, right. But trust me, it's yes, the purple line is the mean. That purple line is the mean. Okay, and this is ±1, ±2 standard deviations. Right. Cool. Excellent. Now, Wall Street jargon and especially a lot of people will say options are you shouldn't trade options. Well, that's so false. Selling options is awesome, but to make it sound very complicated, it's not. It's not. It takes a lot of time and effort to work on this. But the good news is you don't have to know anything about options to do this strategy. I can walk you through everything you need to know. You don't have to watch the market all day. This is a perfect trading strategy for newer traders with smaller accounts that are looking to grow them quickly. But the strategy is also not limited to small accounts. If you have a very large account, you can use it there too. The strategies are safe. No naked selling, no random assignment of stocks, and I've got stops. I don't put in stop loss orders. I put in visual stops. And nowadays with Thinkorswim, you can actually create an alert where you think visually you want to get out of this if it goes against you, and you can go about your business, and Thinkorswim will alert you on email or text alerts, or your computer will start beeping at you to have you take a peek at this. Okay, how do I trade weekly options? Step one, I place a trade when the SPX is overbought, oversold. Step two, I exit profitable trades on the Fibonacci extension. Period. End of sentence. That's it. That's it. One of the things I've learned over my long career is you gotta keep it simple. The simpler, the more repetitive, the easier it will be for you to pull the trigger to make a trade and pull the trigger to exit at the right time. Now, the one thing I don't have here is step 2A, which would be exit a losing trade when it goes against you. And I look at measured moves. I don't want to get into all the details on that just yet, but I do have an exit strategy for losing trades. And there will be losing trades. There will be losing trades. George asks, is the regression channel the same as Bollinger Bands? It's close. It's close, but it's not identical. Another thing I would suggest you do, George, is on your trading platform, go ahead and bring up the SPX, lay in the regression channel, and then lay in the Bollinger Bands, and you'll see how it differs. You'll see how it differs. I've used both. I love the regression channel. Absolutely love the regression channel. Okay, Joseph says, do you have a great book recommendation for Fibonacci extensions? No. I learned this from a professional many years ago, and I have never come across a book that taught it as well as he taught it. What I would suggest, Joseph, is I'm going to show you my website in just a second. I have a tutorial on Fibonacci extensions that will be better than any book you could purchase. All right. Okay, cool. Here's a quick trade example. You can see that the SPX was, and this is the 15-minute chart, 10 days. The SPX was right around the mean. It came down to the -2. What do we know at the -2? You've got a very high probability, that it's going to go at least to the mean. We put on a trade down here. We entered Tuesday, way back last April. Yeah, I probably ought to give you a more current one, but I'm sorry I didn't do that. With the fourth week in April, where we sold the 2045 put, and we bought the 2040 put. You're buying one further out of the money. This is our protection point. This is also the point where it was at the -2, and that's a support area right there. That's the one that we bought. We're selling this one, we're buying this one. We got $2.50 worth of credit when we did that, and in 2 days, it went up to a Fibonacci extension of 161, all the way up to the +1 on the regression channel. Bam, we were out. We exited with a 40-cent debit on that $2.50 credit for an 85% return in 2 days. $85% return in 2 days. Okay, Alex is saying, how about iron condors? I do iron condors occasionally, but usually I won't put on an iron condor all at once. I might put on this bull put and then come up here and put on a bear call because it's had a big move down and a big move up, and then let it go because I know it's going to revert back to the mean. I will occasionally put on an iron condor like that. And by the way, for those of you that don't know, an iron condor is nothing more than a bull put and a bear call together. You're getting double the premium. This is just a quick chart showing, the results, and the results are you can see the red was a bull put. Put the bull put on, boom. Put the bull put on, boom. Okay. Put the bull put on, boom, boom, boom. Here's the bear call, boom, boom. Okay. This is a more longer term chart. This is a 90-day 1-hour chart. I like to look at, and I'll show you my Thinkorswim screen real quick here. I like to look at 2 charts, the 90-day 1-hour and the 10-day 15-minute. I like to look over here and see if this gives me a little bit longer term perspective as to whether it's overvalued or undervalued. If it's undervalued, I want to put on a bull put. If it's overvalued, I want to put on a bear call. Once I look there, I come over here to the shorter term and I'm looking to see this is a regression channel on the 10-day. Okay, and this was up to the +1, bear call. Bear call. This was a bull put that was a loser. I also put this bull put on, and just today I put this bull put on. Okay. This trading strategy has about 70% winners. Has about 70% winners. And that's for the last 3 years. Now this was the last 21 months results based on $1,000 per trade. $1,000 will buy you about 4 contracts. About 4 contracts. It's at a 25x return. 25x return. The thing I like the most about this is look at the drawdown periods. Very, very little drawdown. Very little drawdown. This is a nice. This is the kind of equity curve that professionals lick their chops on. Okay, nice returns, very little drawdown. Okay, let me see. Let me just. Well, I put some comments from our members. I do want to get to the website. Let me just go over a couple. I paper traded and did well, and last week I sold my first real money trade, a bull put, and according to my by hand calculations, I made 59%. Fantastic. This is what I really like about it. He paper traded first. That's what you got to do. Start small. This is not going anywhere. I've been making money on the SPX. I started with 1 contract. Now I'm up to 10. Okay. Averaging 47%. Okay. Really enjoy trading the SPX. I started out paper trading, went to live. The results have been fantastic. I've done 8 trades, 4 to 10 contracts, 100% winners. Can't get any better than that. Well, it's not going to give you 100% winners. You're going to have losing streaks. And that's just part of trading. That's just part of trading. What I want you to do is join my membership community for free. I want you to become familiar with me. I want you to see if these strategies make sense to you. Your free member dashboard, and I'll show you in a second, has all my strategies and precise video curriculum as well. It's got 10 session lags of my daily trading sessions. I do a not only when I see a trade do I do a text and email alert, but I do a nightly blog about it. It's a video blog that's sent right to you, or right on the website. You can actually review the programs that I have. Experience the truth about trading. Not every trade is a winner, but the winners crush the losers in the long haul. Okay. Once again, it's www.optionsinfinity.com, and let me bring it up here real quick. Okay. When you go to www.optionsinfinity.com, this is the home page. This is the home page. And these are all tutorials that I have done for you. This is, if you don't know anything about options, here's Options 101. What's the leverage in options? I told you about how I pick financially strong stocks. How do you know how much to put on each trade? Here's a little something on psychology you probably never heard about. There's regression channels. Here's the Fibonacci and measured moves. All you have to do is click watch now, and you'll get my tutorial on how I was taught to use Fibonacci's. Okay. Let's see, weekly options, credit spreads. And all you do is come down here and hit free membership. You put in your email address, and you're one of our community, and you can take advantage of all that stuff. Now, if all this stuff makes sense to you, and you say, Dale's pretty sharp. He knows what he's doing. Here's my 3 trading programs. Option Pro is a combination of selling monthly options and buying calls and puts based on the 22 financially strong companies of 10 different market sectors. I've just talked to you about SPX War. If you want to find out more, all you do is click there, and you're going to find out more, or you can just scroll down. Here's a system quick view. If you join, you get a 4-part systems course, daily session review, for a full portfolio analysis, real-time text and email alerts, monthly Q&A sessions, no contracts. You can cancel anytime you want. There's no contract. And this is the one I use for my people that have a big portfolio that want to hedge their hard-earned money. Let me just go here to the SPX War and show you what I've got there. Okay, here's an interview with one of the members. It's a 31-minute interview. I think you can learn the best by hearing from somebody who's who has. It's not me. It's him. Here's some of the system stats. What you get is the 4-video course. You get the nightly session review. You get the real-time text and email alerts, and you get the come in once a month as we have an hour-long webinar that I do. It's actually the 3rd Tuesday of the month. I'm the one that you're going to be talking to. I'm the one that's going to be answering the questions. You're going to be talking and interfacing with me. I am the founder and the teacher and the person behind www.optionsinfinity.com. You're not going to be talking to anybody else. You're not going to be talking to anybody else. I do it. I do this for a living, and I want to be the one that teaches you. Okay? All righty. Let's see. Let me see if I had any more final questions here. What's a confirmation for entry? Good question, George. Most times I'm looking for a measured move. And what I would suggest you do is become a free member and go under the tutorial for measured moves. Measured move basically shows you when the trend is changing from an uptrend to a downtrend. It's higher highs and higher lows for an uptrend. It's lower lows and lower highs for a downtrend. Okay. All right. So once again, www.optionsinfinity.com.